Hello everybody. In the spirit of sharing investment lessons so that hopefully we all learn together here in the YouTube community, I wanted to talk about a particular stock investment that you could go look up. This isn't advice, financial advice. I'm just kind of sharing some of my experiences. But the company, the ticker is PAGP. PAGP, that stands for Plains All American, I think, General Partner. There is a version of this stock that's a master limited partnership. That ticker is PAA, but today I want to talk about PAGP. You can buy and sell it like a normal stock. Now, the interesting thing about this on a financial independence, retire early journey is that this stock has a really high dividend. And sometimes when companies have high dividends, it's a warning flag to say really be careful. But this high dividend, you have to know where the dividend is coming from. Most of the pipelines pay high dividends because the companies exist to generate revenue rather than exist to try to really appreciate shares. So the company moves energy, oil, gas around the country. They have thousands of miles of pipelines. I think I looked up the market average of this company. It was somewhere near 12 billion or 14 billion or something. It might have actually been smaller, but I can't remember. But it's a fairly large company. But it's the yield that's the most interesting to me. So the dividend yield, when I looked it up today, was 7.7%. So whenever you have a high dividend, you also have to worry about the price you pay. NAV erosion is when your, I think, notional average value goes up or down, considered the capital gains or capital losses. So over the past couple of years, PAGP has kind of been on a slow trend upwards, which is something you want. So the ideal stock is you get both capital gains and yield from the stock. So again, as of today, this one's paying 7.7%. Now what that means is if you invest $1,000 and you get 77 back, if you invest $10,000, you're going to get 770. If you invest $100,000, you're going to get 7,700 every year. And if you have $1 million, you get $77,000 a year. Now, $77,000 is enough for many people to retire on. That could be all the income you need. So, if you, on an extreme level, put all of your funds into PAGP, $1 million could be enough to set you up comfortably for the rest of your life. So that's kind of interesting. Again, I don't recommend any of these things. It's just kind of a investigation and taking a look at something. With the higher with the higher dividend yield, you could potentially retire sooner or reach financial independence sooner than you could otherwise. So the dividend yield of the S&P 500 is only like 1.3%. So if you're trying to retire on the S&P's dividend, you'd need several $1 million. Maybe it's 2.5 or 3 or 3.5 to live off the dividends alone. I know they appreciate, you get capital appreciation too, but that's just something to kind of consider. This is an alternate strategy of trying to get high income paying securities and use those instead of capital gains. So kind of interesting. There is something occurring in the company that I'd mentioned in the first quarter of next year. I think Plains is selling part of their pipeline assets off to somebody in Canada. And from what I can tell, there was some kind of a tax event that was happening, an extra dividend that was going to get paid out. So just be aware that something's occurring. The company is selling part of itself. So that when the news came out, the price jumped because there was going to be a higher dividend. And just know that that's coming next quarter. I'm still investigating on what that actually means for me because I own both the general partner and the MLP version of these shares. But overall, this is just one of those other potential stock investments you might not known about. It's a big pipeline company. It moves energy back and forth across the country and in Canada, I guess, right now, but that'll change at the end of this year. Really high dividend, 7.7% as of today, and can be another method that you can use to diversify some of your funds. It's not a technology company, although pipeline companies can benefit from the new AI thing because before nuclear reactors get put up in place, which is probably going to take 10 years minimum. All these AI data centers need power, and the solution to that right now is natural gas. And over time, they're looking at trying to figure out how to power these centers, and really that's natural gas. And natural gas happens to move across pipelines. So that's potentially why these pipeline stocks can be a growth story. They're tied into the AI revolution, but they're also just tied into how we get energy moving across the country. So check that out. Again, PAGP, interesting stock. Do your own investigation. 7.5% yield. It's been gradually increasing in value over the past couple of years. So it could be the best of both worlds, both capital appreciation and income. So take a look, and hopefully you enjoyed my video. We'll see you.